Good evening, everyone. Welcome to the series, and let me welcome all the dignitaries to this webinar. So, let me first quickly introduce our chairman, our beloved chairman, C.A. Chandrasekhar Chitray sir. So, he's a chairman, Ethical Standard Boards 2025 and 26. C.A. Chitray sir is a distinguished chartered accountant and a senior partner at C.V. Chitray and Company. He's a member of Central Council of ICI consecutively since 2019 till will be till 2029. For the year 2025 and 26, he has been appointed as a chairman of the Ethical Standard Boards and the Board of Internal Audit, Management Accounting, and vice chairman of the Committee of International Taxation. He has previously, excuse me, he has previously served as a chairman of Direct Tax Committee and the Peer Review Board 2022-23. Beyond ICAI, he has contributed extensively to industry bodies, having been treasurer to MCCI for a decade and currently serving as a chairman of its Direct Tax Committee and member of its Executive Committee. He was also nominated to the Cost Accounting Standard Board of ICME and has held leadership roles such as chairman of Pune branch of ICAI. An academic at heart, C. Chitray sir has lectured at various commerce colleges and management institutions and authored several articles in reputed publications like Taxman, Economic Times, Times of India, and others. His notable authored works includes User Guide on Tax Audits, VDIs, and Service Tax for Professionals. With his writing earnings awards such as Best Article Prize in the PCA's journal, specializing in direct taxes, drafting, conveyancing, and corporate counseling. C. Chitray has delivered numerous lectures at seminars, conferences, public forums, and including the prestigious Vasant Vyakhyanmala, reflecting his deep commitment to professional education and public engagement. Welcome, Chitray sir, and I would like you to have the opening keynote for all of us who are watching. Thank you.
Well, thank you, Saili, and welcome, Naveen.
Namaskar.
Today we are going to discuss very important topic, NOCLAR. This topic, NOCLAR, has been prescribed under our Code of Ethics, that wherever you find that there is non-compliance with law regulations, it is obligatory for a chartered accountant to bring this to the fore and ensure that the compliance is made. This is with a view that the stakeholders, the society trusts on chartered accountants. So chartered accountants has to guard the social good, irrespective of the fact whether it is against the interest of the client or not. Actually, complying law is not against any corporate. To the contrary, coming within the four corners of law should be the objective of each and everyone operating in India or maybe elsewhere. Now, at times, NOCLAR is taken to a far-fetched end that there are so many rules, regulations in law. So, as a chartered accountant, am I supposed to know and understand each and every law? And if there is slightest deviation here and there, is it obligatory upon a chartered accountant to point it out? If he notices any transgression of law or perceived transgression, what are his responsibilities? So, one has to appreciate what are the confines to his responsibility and what is the amplification of his responsibility. And maybe while doing audit or rendering services is come across, then what he has to do. So all these questions are pertinent for the purpose of professionals to understand. And really this session will equip you to know what is your responsibility, whether it is unlimited or it is bound by the performance of your duty. And while performing your duty, if you observe anything which is fatal for the purpose of functioning of that organization from the perspective of society, what he is expected to do in a general social good, that is the encompass of this particular session. As far as Naveen ji is concerned, he is seasoned faculty in the topics relating to code of ethics. He is also a co-opted member of our committee or board, and he has extensively researched this particular topic about NOCLAR. Of course, while you are doing some activity, assignment, audit, you may come across something, you may not come across something, but ultimately, as you know, In case of audit, it is said that audit not documented is not done. Therefore, associated with discharge of responsibility, documentation also assumes a significant importance. So, in order to demonstrate that you have duly discharged your responsibility, which has been enjoined upon you through these NOCLAR provisions, what are various documentation requirements that a chartered accountant should do also will be discussed by Naveen. I, on my own behalf, on behalf of the board, very thankful to Naveen for kindly agreeing to uh, engage this webinar on a very important topic. I'm sure that you will understand the issues. You will understand how to comply with this NOCLAR provision, which is now obligatory, not only under Code of Ethics, but also under standards of audit. Still, if you feel that a certain topic needs more elucidation, if you have certain questions in mind, maybe you can put them in chat box, and Saili will ask them at the end of the session, so that Naveenji can clarify your doubts. I'm also thankful to the office, particularly Ashish and others, for the coordinating this particular webinar. And I'm sure that there will be great value addition through the discourse by Naveen Dandariya ji. Thank you.
Thank you, Chitra sir. Again, the words of wisdom. We love to hear you, Chitra sir, every time we meet you. So over to Naveen sir. Let me quickly introduce to him. So today's our faculty. I know he needs no introduction, but then still Naveen has Naveen's thought leadership is reflected in his regular contributions to respected publications like Taxman, Tax Sutra, as well as various branches, Study Circle, ICAI, where his articles on GST, income tax, and code of ethics are frequently published. So Naveen is a fellow member of ICAI and has additionally qualified as a diploma in information system audit. He's also completed his independent director course under the aegis of Indian Institute of Corporate Affairs and has been awarded lifetime membership of Independent Directors Data Bank maintained by IICA. Currently, Naveen is a partner at Messrs. D. Dhandaria and Company and is a seasoned practitioner based in Assam. Over 23 years of extensive experience in the field of auditing, direct tax and indirect taxation, he has carved a distinguished professional journey. Naveen holds the faculty positions at several reputed institutions. He is regular faculty member at National Academy of Customs, Indirect Tax and Narcotics, that is NACIN, where he imparts GST training to officers to the Central Board of Indirect Taxes and Customs, an appointment made by Ministry of Finance, Government of India. Additionally, he serves as a faculty member of ICAI, delivering lectures on Code of Ethics, CAQ, and GST. It is his third consecutive term as a member of Grievance Redressal Committee of the GST Council. Moreover, he is appointed as an expert under Section 153 of the CGST Act and Assam GST Act to assist central and state GST officers during any stage of scrutiny, inquiry, investigation, or other proceedings under GST laws. Naveen has been instrumental in training officers from Directorate General of GST Intelligence, DGCR, and the state GST departments. He holds multiple courses, more than 12 that I can count right now. And then Naveen is, in recognition of his exceptional contribution to the field of taxation and ethics, he has been awarded as an honorary doctorate degree in Goods and Service Tax, which is GST, by European Professional University Ireland, and has received prestigious Bharat Gaurav Samman conferred by Awards Trust of India. Recently, Naveen has been awarded as a Voice of Value Award by Tally Solution on the occasion of CA Day 2025. Over to you, Naveen sir. We cannot wait to hear you. And yeah.
Thank you, Sally ji,
Yes.
for beautiful introduction. Good evening, all the participants. Respected Chairman, Sir, Ethical Standard Board, in absentia, Vice Chairman of the Board, Rohit ji, distinguished fellow professionals in practice and in service, and all participants joining us virtually, a very welcome to each one of you. It is indeed a privilege and honor to address this august gathering on the topic of such critical relevance, NOCLAR, under Code of Ethics and Audit documentation. As chartered accountants, whether in practice or serving in any organization, we hold the responsibility not just to our clients or employing organization, but to public at large. Just I share my screen. So we hold the responsibility to public at large to check whether our deeds do not go wrong in compliance with laws and regulations of the law of land. The concept of NOCLAR, that is non-compliance with other laws and regulations, has embedded in the Code of Ethics 2019 revised, earlier made applicable from 1st July 2020. But due to COVID pandemic, it was deferred and ultimately made effective from 1st October 2022 by the announcement of Ethical Standard Board. As we all know, we currently have 3 sets of Code of Ethics volumes: Code of Ethics Volume 1, Volume 2, and Volume 3, that is a digest of case law. Across India, when I am taking this topic, one common question arises: what happens if CA do not comply with Volume 1? To answer this, how this guidance or code is coming into effect and what is the regularity the CA has to do is that the Code of Ethics Volume 1 has been issued by the Council as a guideline. And if a chartered accountant member, whether in practice or in service, do not follow this code, will be held as guilty under Clause 1, Part 2 of Second Schedule of CA Act 1949. And if he is held guilty, then the disciplinary mechanisms as per Section 21 capital B can be invoked on such erring chartered accountant. So briefly, the NOCLAR provisions, Section 260 applies to the chartered accountants in service. In the code, it is said as professional accountants in service, and Section 360 applies to the chartered accountants in practice, and in code, it is said as professional accountants in public practice. The recent amendment in 2022 carried out in subclause 2 of Section 15, FA was introduced, and it says that it's to issue the guidelines for the purpose of carrying out the objects of this act. So it is amply clear that the requirements of Volume 1 is also binding on the chartered accountants across the length and breadth of the country and globally also, who are the members of our esteemed institution. Earlier Code of Ethics 2009 was revised in 2019, and it made as obligatory by using the terminology shall. And the entire Code of Ethics has the paragraph numbered with R or A. R means it is required, A means how the requirement is to be applied by application material. Now, another pertinent question is, what are the objectives of NOCLAR requirement of Section 264 CAs in service vis-a-vis Section 364 CA in practice? Basically, we have to see that the chartered accountant member has to comply with the principles of integrity and professional behavior while discharging his duty as a CA in service to an organization or as an auditor giving assurance functions to an audit of an organization. Herein, what is required is earlier, before the announcement made in September 2022, the NOCLAR provisions for the CAs in service was applicable to each and every chartered accountant in service, irrespective of their hierarchy. But with revised code has been made applicable from 1st October 2022, and it is for senior professional accountant in service, which will come later in the slides. The earlier code used to say that any chartered accountant in service, if he comes across any provisions of NOCLAR, that is non-compliance of the laws and regulations applicable to an entity, and it is not been complied with, he has to follow a matrix to address the issue, and the matrix was he will report to his immediate hierarchy, means immediate one level superior, and wait for his response. And if that superior is not able to do the thing which is required, he may again escalate the matter. And he has to judge by his professional independence and skepticism that whether such non-compliance and what is its effect of magnitude on the organization's financial health. The code says that to comply with the principles of integrity and professional behavior by alerting the management or wherever appropriate those charged with governance, TCWG, of the employing organization, enable them to rectify, remediate, or mitigate the consequences of identified or suspected non-compliances dated to the non-compliant where it is not yet occurred also. The code also emphasizes where there is suspected non-compliance that has to be also addressed, and in the greater public interest, it has to be taken care of. As per code, what is non-compliance and what is the magnitude? The non-compliance with laws and regulations, non-compliance comprises act of omission, that is failing to act when it is required by legal regulations or a moral duty. Suppose, for an example, Factories Act requires if a certain number of workers exceeds, say 100, then they should have a mess facility, and in that organization, if mess facility is not done and they are failing to act, then it is also considered as non-compliance of other laws and regulations relating to operations of that entity. Act of commission means the deliberate intention to do something wrong which is forbidden in the law, that minimum standards of pollution, say, is required to be maintained in emitting the pollutants or wastages. But if that standards are not complied with, again, for the operational efficiencies, it is said that is deliberate misconduct of commission, whether intentional or unintentional. But this does not cover the personal misconduct which is not related to business. For an example, C, a CEO or someone of higher management goes on the road and while driving jumps off the red light or parks the car in no parking, then these are the personal misconduct of that particular employee of the organization, and it will not be considered as non-compliance with laws and regulations which is related to that particular entity. What is the scope of NOCLAR as defined in above covers all laws and regulations. NOCLAR is for suspected non-compliance as well as non-compliances. First, the laws and regulations generally recognized to have direct effect on the determination of material amounts and disclosures that are required for financial statements. We will come with the examples in later on. Other laws and regulations compliance with which might be fundamental to the operating aspect of employee organizations or audit client to avoid material penalties. Yeah. Anyone can say, am I audible and the slides are visible? Ashish ji?
Yes, yes, you are audible, sir, and slides are visible.
Okay. Now, how and what laws and regulations are applicable? When a chartered accountant goes for a service in an organization, then he is supposed to know those laws and regulations which is required to him to play the role of his functions which he required to perform as a chartered accountant. Suppose the chartered accountant has been employed by the employee organization to have a control over the accounts, then any non-compliance relating to the accounts of that organization is required to be checked by that chartered accountant. If his role is different and he is serving the organization, say a chartered accountant is holding the post of COO, that is Chief Operating Officer of a listed entity. What his post requires is that he has to oversee the proper operations of all business systems with focus of various production life cycle and all other production capacities and operating factors of the organization. If he is holding that post, then he should also know all other laws and regulations which are applicable to that entity. Take an example. Suppose Mr. A, Chartered Accountant, has been appointed as COO of a manufacturing facility which uses hazardous chemical in the manufacturing steps or procedures. Then, while keeping that hazardous chemicals in the vicinity of the manufacturing facility, there are certain sets of laws and regulations, say for petrol or formalin or melamine, they should have a safety tank, secured firefighting equipments and everything, and it has to be checked by respective regulatory authorities. And suppose there is a scenario that the license to keep such hazardous chemical has already expired and the minimum requirement for that storage facility is also not maintained, and it comes to the knowledge of COO, then what he should do? If such non-compliances are there, then first he has to report to the top management to mitigate such non-compliances, and if not responded properly by the top management, then he has to document how he has communicated, what was the response received, and on his professional judgment, he has to take care to report the same to the regulators that this non-compliance is there. Because in case some mishap is there because of such non-compliance, then the public at large can be at a danger. So it will depend how the chartered accountant in service is placed in his hierarchy within a listed company as an employee. Again, there is another type of post, say CMO, that is Chief Marketing Officer. Herein, it relates to the procedures of marketing, how the products are marketed for a public at large. Herein, if the marketing process or the advertisement taken by the entity is misleading and what they claims it is not the property of the product which is manufactured, then he should immediately take actions that such misleading advertisement for the product or its properties in the public at large is stopped from being aired and should report to the top management. So the accountant's role, if he is positioned as a chief financial officer, then the role of an accountant comes to his post and he has to see that the financials are true and fair and they do not have hidden or fraud element if to his knowledge, and if it is so, then guided by SA 240 also, he has to exclude such fraudulent matter. This is in a brief what a chartered accountant or a professional accountant in service has to do. Again, comes for the chartered accountant or professional accountant in public practice to be done when he is giving or discharging his assurance function. Under NOCLAR, under Code of Ethics, this is made mandate under Section 360 for listed entities plus which have a net worth of more than 250 crores. But there is SA 250 which is applicable from 1st April 2009 or regarding to all audit assignments to the chartered accountants who are carrying on audit, and if there is suspected or other non-compliances to the laws and other regulations, that is needed to be reported by such chartered accountant who is carrying on the audit. Now, the next question, what are the responsibilities of employee organization with the management and TCG, those who are charged with governance? If the one level lower chartered accountant in service identifies or flags of any non-compliance of other laws and regulations, the top management or TCG first has to take that or non-compliances, whether that can be immediately complied with or that can be meted through, or what are the remedial actions that they can take that such non-compliance is met and made good. SA 250, Standards of Auditing 250, in its para A3, states that examples of policies and procedures that the management and TCG of an entity may put in place to assist in prevention and detection of non-compliance with laws and regulations. How the organization should maintain a register which highlights or tabulates the significant laws and regulations which they need to comply with, and how they monitor whether their compliance is there or not. Take an example, the entity is operating in an area and that area local law requires that that factory has to obtain trade license, then again establishment license, then they have to comply with, suppose, fresh drinking water facility irrespective of number of employees, special area for female employees for their resting during the summer season. This can be the local level law requirement also. such kind of requirements should be tabulated in a register, and there should be a checklist followed by the entity that such compliances are adhered thereto. And a chartered accountant in practice, while going through the assurance function through audit, should compulsorily check all these such kind of laws and regulations, plus whether their compliance, renewal, license fees, compliance, or any other report which are there in place or not. Depending on such documentary evidence, the accountant, the chartered accountant in public practice needs to see that this kind of other laws and regulations has been complied with. Take an example. Suppose there is a SOCOS notice under goods and services tax, and in that SOCOS notice, it is with SOCOS to the entity that the valuation is not done properly for related party transactions. This is a SOCOS notice received by the entity. The audit functions is carried out as per standards of auditing and the law which governs the audit. The GST comes under the framework of other laws and regulations. Now a department has given a notice, SOCOS to the organization. The chartered accountant, while adhering to the function of giving assurance engagement, he has to check whether the SOCOS as delivered by the department is factually correct on the merit or it is factually wrong. If that chartered accountant is not equipped with such knowledge of checking such notice, then he should seek an advice with the professional who is an expert in that field, and then that advice has to be scrutinized by the auditor using his professional expertise whether that advice is proper or not, and then he has to form an opinion whether such non-compliance, if at all exists, as so caused, and what is its impact on the financials of the entity, and that impact and magnitude he needs to disclose to the public at large through his audit report. And if they can meet and if the entity is sure that the SOCOS is not correct, then based on that document evidence, the chartered accountant in public practice requires to form different opinion. This is one kind of example to deal with SOCOS notice relating to other laws and regulations. This is also helps in monitoring the legal requirement and ensure how it is done through. This is highlighted in this slide. Now, few terminologies used in our Code of Ethics Volume 1. How professional accountant is defined. An individual who is member of Institute of Chartered Accountants of India is an professional accountant. The part 1 of volume 1, the code applies to both professional accountant in service as well as professional accountant in practice and their firms. Part 2 generally applies to professional accountant in service as well as it also applies to professional account in public practice, which is related to their own firm in which that professional accountant in public practice becomes as an employee to their respective firms. And part 3, 4A, 4B refers to public and accountants, professional accountants in public practice and their firms. This is the broader outline of the code. The same is shown in this slide. This is the guide to the code. This is volume 2, the various chapters which contains accounting and auditing standards, Chartered Accountants Act, council guidelines for advertisement, and the first and second schedule. Now coming to the topic in general for professional accountants in service, and this part is applicable to the professional accountants in service of a listed entity, and with the announcement in September 2022, this is now made applicable for senior professional accountants in service. This was the announcement which I have referred to. It is on 29th September 2022, making the section 260 and section 360 of the volume 1 of Code of Ethics effective from 1st October 2022 with certain amendments. Who is professional accountant in service? A professional accountant working in the areas such as commerce, industry, service, public sector, education, the not-for-profit sector, or in regulatory or professional bodies who might be an employee, contractor, director, executive or non-executive, owner, manager, or volunteer. Senior professional accountant in service is defined as directors, officers, or senior employees who are able to control the employee organizations, human resources, financials, technological upgradation, physical and intangible resources. As we talked earlier also, non-compliance with laws and regulations for PICE, professional accountant in service, relates to the act of omission or commission, intentional or unintentional, which are contrary to prevailing laws and regulations. The professional accountant of employing organization. Now take an example. Suppose as a chartered accountant in practice, you have been assigned the duty of Chief Operating Officer, COO, under which the entity's other segments, say human resource, the production facility, the technology facilities comes in. Now I would like to expressly say upon the technology part, which comes under COO in an listed entity. The chief technology officers and other officers thereunder are from non-commerce background, and they are responsible for implementing of the information communication technology within the organization, plus they are also responsible for the maintenance of data, making it available to the users within the organization in imparting their day-to-day workings, as well as also keeping the data secured, and it should not be leaked. As we all know, in 2023, the government of India passed one legislature which we call as DPDPA, the Digital Personal Data Protection Act. Herein, in nutshell, the government of India says that the data which is taken from the outsider by an entity for their regular activity, and that data is used, and thereafter the organization does the supply, say the material. For example, suppose the vendor master creation in a SAP environment. What requires is the personal data of that vendor, be it PAN card for income tax purpose, Aadhaar number, address, bank account details, Udyam certificate, and other personal informations, and that is captured as a vendor master. And if this particular personal information of vendor master is in case leaked due to any malfunctioning, say by virus activity or server hack or something, if the implication is of a high magnitude, then the organization for such non-compliance can result in substantial penalties, potentially reaching up to 250 crores under this Act for Security Failures. So, as a chartered accountant COO, what is your role? The role here is you have to see that the organization has foolproof system and well-documented manual for the data security. And there should be a periodic test and audit should be conducted whether there is any data breach or not. And as a chartered accountant, you have to go by the documents and the reports whether all the tested systems are in place or not. If there is any red flag, you have to seriously check on it and you have to tell to the top management first for immediate remedy, and if not, then it has to be reported. Ashish, am I clear up to here? Any questions?
No, sir. Till now, no question received. Everything's clear.
Okay. Now, here in the announcement, the relaxation was given is it is applicable for senior professional accountants. Earlier, before this announcement, it was applicable for all the chartered accountants in service, and the definition for senior professional accountant is kept as same. It has not been changed. And in brief, the senior professional accountant can be termed as KMPs under LODR. This is the definition. This I already discussed. Now, the second paragraph is very important. Recognizing that such a situation can often be difficult and stressful one for the professional accountant, and accepting that he is a prima facie ethical responsibility not to turn a blind eye on the matter. Means a professional accountant in service, when comes to know a particular non-compliance, he cannot keep shut or he cannot say that this is unrelated matter to him. If he come across, he has to take some action as he is binded by the section 260 of NOCLAR provisions. Same with the professional accountants in public practice. And also additionally, he is guided by SA 250. Now the question in mind comes is, if the announcement made it applicable from 1st October 2022, where these provisions are applicable for a period before 1st October 2022. For professional accountants in service who are employees, these provisions are not applicable for a period prior to 1st October 2022. Means the professional accountant in service, these provisions are applicable only to the listed entity employees, and that too they are employed as senior PIs. This is the table prior to 1st October 2022, unlisted entity not applicable. After 1st October 2022, unlisted entity not applicable. For listed entity, only with the senior professional accountant in service. The next slide comes with applicability of NOCLAR provisions prior to 1st October 2022. SA 250 was applicable to all kinds of entity where audit functions were carried out, and on or after 1st October 2022, there is an additional requirement of section 360 of Code of Ethics to comply with. Now, what is the rationale behind the new NOCLAR provisions? This is an important slide. A professional accountant means a chartered accountant accepts the responsibility to act in public interest. NOCLAR by the employer or audit client can be difficult or stressful situation for a professional accountant, as he is required to comply with the fundamental principles and apply with conceptual framework set out in section 120 of Code of Ethics to identify, evaluate, and address threats to professional and ethical conduct. Section 120 I will discuss later on. The threat under this NOCLAR provisions can be of self-interest, that is, the professional accountant may be self-interested in such non-compliance, or he may have a pressure of his superiors to keep shut for such non-compliances, that is intimation threat, where the coalition of top management is there for such non-compliances. Then also our Code of Ethics casts the responsibility under section 260 how to mitigate such kind of threats under this code. Fundamental principles, as we know, there are 5: integrity, objectivity, professional competence and due care, confidentiality, professional behavior. Then these fundamental principles are tested with the threats. There are 5 kinds of threats: self-interest threat, self-review threat, familiarity threat, advocacy threat, intimation threat. What is self-interest threat? The professional accountant in service may be under the financial or other interest for such non-compliance and may influence his decision. And intimation threat here is that there may be the pressure of the top management that if you report or you do something against the organization, you might have a non-promotion or you may be removed from the organization. While complying with the NOCLAR provisions, these 2 kinds of threats has to be addressed by the professional accountant in service. The self-interest, he has to address it, that is, he has to see that his self-interest is not there and he has to act for public in large, and he should not bow down to the pressure under intimidation threat, and he has to respond it with proper reporting as per the hierarchy of the organization, and after taking their reply with his professional judgment, he should disengage with the assignment, and then he should go on for the reporting to the regulators also, if required. Again, whether NOCLAR requirement of section 260 applies to all chartered accountants, that is, professional accountants in service who are employed to the organization. In the Code of Ethics, Volume 1, 2019, applicable from 1st July 2020. Before the announcement of September 2022, it was made applicable to all the employees of the listed entities who are chartered accountants. But with the announcement, it has been carved out that this section 260 will be applicable to the senior professional accountants in service with effect from 1st October 2022. The threshold limit of 250 crores, whether it applies to the professional accountant in service? This question. This threshold limit does not apply to professional accountants in service. The threshold limit applies to section 360 and it is for professional accountants in public practice. What is the objective of section 260? The main objective of section 260 is laws and regulations generally recognized to have direct effect on the determination of material amounts and disclosures of employee organization financial statements. Now suppose, take an example, how the determination of material amount has significant effect on financial statement. For an example, suppose the entity is checking on its component accounting for fixed assets and it finds that a particular component in that entity in the production facility of a particular machine, say hot press, its hydraulic pressure or hydraulic gear is going out of order and its replacement, if not done within the time frame, then the production can be affected. Though it is a part of organization's operational part, but that machine, if goes down, it may have material impact that the production is hampered, whereas the fixed and variable cost relating to human resources organization apart from production continues to incur and it is not taken within a particular time period, then it may have a material impact on the finances of that organization. And if this fact is not addressed to, it may lead to misleading financials at the year end. Second part is other laws and regulations, the compliance with which might be fundamental to operating aspect, which I talked earlier also. Now, a pertinent question, whether disengagement of a senior employee due to NOCLAR absolves him from other responsibilities. It will surely depend on the magnitude of non-compliance, and merely disengagement by giving resignation will not absolve him from the responsibility. Suppose the non-compliance is under money laundering, that is PMLA, Prevention of Money Laundering Activities. Under PMLA Act, the wrong action of any person in case of movement of large chunk of monetary items for undue advantage is covered in nutshell, and such kind of PMLA contravention, if comes to the knowledge of such senior professional accountant in service, just by disengaging him will not absolve his responsibility. He, in such scenario, even have to breach the confidentiality within the entity and report directly to the the regulator, that is enforcement directorate, that such non-compliance is there within the organization. What are the requirements regarding NOCLAR in section 260 to be complied with senior professional accountant in service in a listed entity? As I discussed for PMLA non-compliances, the required para 260.6, I am quoting it, requires that when encountering non-compliance or subjected non-compliance, the professional accountant shall obtain an understanding of those legal or regulatory provisions, if any, and comply with them, including any requirement to report the matter to appropriate authority and any prohibition on alerting the relevant party. Example, pursuant to any anti-money laundering regulations. Many employing organizations may have established protocols and procedures regarding how to raise non-compliance or suspected non-compliance internally. Normally, we call it a hierarchy matrix, a label above the person who detected. He talks to his immediate authority above him. That authority, if is the topmost management level, then they have to see that how the remedial actions are taken and what are the things that they have to do to mitigate such non-compliances. If protocol and procedure exist within the employing organization, the senior PIS, that is senior professional accountant in service, needs to adhere to such protocols and procedure. But if there is a gravity of situation wants him, then he may go beyond the confidentiality requirement and may also report to the regulators depending on the magnitude of non-compliance. Now, I have breaked up this as obtaining and understanding of the matter. What is the magnitude of non-compliances? Suppose there is a non-compliances, say, while framing financial statements, it has come that the turnover or sales for a particular year-end quarter, say quarter 4, is below the year-on-year target, and management decides to artificially increase the turnover by making the supply bill, and that too without actual dispatch of the materials. What is the meaning? Suppose the materials are yet to be dispatched, but the outward supply bills has been made to inflate artificially the turnover of the entity. Now, as a senior, say CFO of the organization, you come across such situation and the top management has already made such entries in books of accounts. What regulations are binding on you? As we all know, Indian accounting standard for revenue recognitions very well states that the sale is to be recognized when risk and reward is transferred. And that transfer is when the goods are dispatched from the entity's warehouse or manufacturing facility. But recording the sale, if done, has to be reversed, and the management is not adhering to your observation that this is non-compliance. Then you have to document it You have to ask why the management is doing so. And in this case, you have to inform this situation to the external auditors of the entity that in such way the turnover has been increased. And what is the effect to the public at large? In actual, there is no sale, but the turnover has been inflated and the borrowings from the bank, the investors in the market gets a rosy picture of the entity and their decisions are influenced. So the matter has to be checked. Now, in this situation, there is ample stock produced lying on the floor of the manufacturing facility, and they have made the sale bill. Then also, as per requirement of the accounting standards, such sale cannot be recognized. So what the court says now, taking that example in mind, if in course of carrying out professional activities, a senior professional accountant in service becomes aware of information concurring non-compliance or suspected non-compliance, the accountant shall obtain an understanding of the matter. This understanding shall include the nature of non-compliance, the circumstances why it has incurred, the application of relevant laws and regulations. Depending on such nature and significance of the matter, the senior professional accountant might cause and take appropriate steps to cause and investigate it internally why it has happened. Suppose there is a report comes that there is preference or stock misappropriation or theft in a godown, then such theft of a godown of the goods has to be accounted for in the books of accounts, and relevant ITC etc. under GST law needs to be reversed. After identification how it is to addressed, and if he is not able to address the matter, he has to, since senior professional accountant in service, he has to report the matter to immediate superior, that is top management, to address to the matter. If not, then he has to disclose to the external auditor. Ashish, till now any questions? Okay.
No, sir, no question.
Okay. Determining whether further action is needed in public interest as such. This is very important. When you come across the non-compliances, now the litmus test is whether such other laws and regulations non-compliance may have an impact on public at large or not. To break down this discussion, first we go to the operating cycle of the organization. Suppose, as in my earlier example, which I talked about, the organization is for its production facility is required to store hazardous chemicals within the vicinity of its production machinery and plants. That storage facility is governed by other laws and regulations. For diesel, the fire standards are required to be maintained. Fire wicket, state fire officers needs to inspect the vicinity of that, and that is to be required to be checked. If there is non-compliance, what may happen? Due to some mishap, the fire can occur. And if the fire can occur, it may go to the surroundings. Now, what to do? I will talk later on. Second, suppose it is a steel manufacturing plant or a coke manufacturing facility. Steel and coke, we all know. And take the example of marble also. All these entities require huge amount of water, and they have deep bore wells to extract the groundwater and use it for their production facility. And if they treat such effluents, liquid effluents, without treating it and discharge it in sewage or ponds, then the water there becomes contaminated and may be hazardous for public at large. If such kind of non-compliance is there, and as a chartered accountant holding the position of COO, Chief Operating Official of the organization, you have to tell and document such non-compliances with the top management to take remedial action, because the public interest at large is there. And if the top management is not in a position or is not willing to adhere to such norms, then you have to first consult within the organization across your same level what to do, take a legal advice, and if required, to consult with our mother body, ICI, in confidential basis. And if required, you have to report to the environment regulating agencies. Now, what are the examples of such kind of non-compliances of other laws and regulations? This is an illustrative list and may have other kinds of non-compliances also. Fraud, corruption, bribery, money laundering, terrorist financing, and proceeds of crime, security market and trading, that is insider trading, banking and other financial products and services, may be diversion of funds to other organizations who are related, or to the relatives of directors, taking loan in the parent and diverting it to the immediate relatives of the top management persons, may have a kind of non-compliance of banking regulations, of sanction letters. Data protection, I talked about. Then incorrect disclosures in the income tax returns in order to make the payments of income tax dues lesser. Environment protection is not done properly, which affects ultimately to public health and safety. All types of laws and regulations related to such kinds of act needs to be known by professional accountant in service as well as in public practice. We commonly term them as CA in service, CA in practice. Under section 260, which is applicable to PIS, professional accountant in service, I have highlighted here with the paragraph note, head note, that what are the requirements, which I have already discussed. So, to give a brief, the requirement paragraph 260.6 is for complying with legal requirement and confidentiality requirements. 260.9, following internal protocols. 260.10, acting promptly based on nature of professional harm. Then understanding the matter. 260.12, addressing is 13, 14, 15. Then how action is to be taken. 16, 17, 18, and 21. Imminent breach. 22, very important. And the responsibilities. Understanding the non-compliance, responding to suspected non-compliance, disclosures to authorities in exceptional circumstances. This is in a nutshell what section 260 requires from professional accountant in service of an listed entity. Now, what are the points which senior professional accountant in service of an listed entity required to disclose on a NOCLAR to an appropriate authority? This is important. If the senior PIS comes to the knowledge that there is some non-compliance which is in actual or potential harm, is that it might cause to investor, creditor, or employees or general public, he has to make appropriate reporting to the authority. Suppose artificially share prices are dropped by the top management at stock exchange for making transfer of shares to related entities or persons. It is a clear picture of insider trading, and he's a senior professional accountant in service, and he comes to know such kind of adjustment going on. He might resort to give such information to SEBI because investors' amount is as a stake, and public at large may lose the confidence in share market. Second, suppose the entity, in order to get a big tender or to get some undue influence, engages in bribery, and it comes to knowledge, then he has to report it. Suppose an entity is required some licenses to operate. Suppose that particular listed entity is into the manufacturing of food items for consumption of public at large, and that food item, before going out for public at large consumption, requires rigorous lab testing whether it is fit for consumption or not under FSSAI standards, and they have to obtain a license for mass production of such food items. If that entity is not adhering to it, then being top management not listening to his remarks or observations and is on the way to launch such products, he should go beyond the organization's confidentiality under section 114 of our code and should report the matter, because due to non-edible food items may have a greater health issue of a public at large. These are few of the examples. Then again, they are trying to evade tax. Then about pollution, I have already talked in, and if there is any activity of the organization which is resulting into environmental pollution, then they should report to the protection environment agencies in different states. It is called by different names, and he should report the matter that such environmental protection requirement is not followed by the entity. So, not disclose confidential information is required in our code, paragraph 114(1)(d). But when the magnitude of non-compliance is at such that the public at large is at distress and that cannot be mitigated by the entity in the due course to come, and it may have an impact, then the professional senior accountant in service should shall act in good faith and exercise while making such statement and assertion, and he should document each and every finding before reporting to the regulators for such non-compliances, and even if required, he may report to external auditors so that they may report to other agencies. This is written here. The matter, the result of discussion and the reporting. The documentation, the accountant suspect or has evidence, he has to document it. Now, the NOCLAR provisions applicability to professional accountants in public practice, we call them as CA in practice. The entire section 260, which we discussed in toto, is applicable as section 360 with a change of reporting and applicability. Here, the CA in practice assumes a wider role because the CA in practice, after conducting audit, issues an independent audit report, and that audit report carries the value and which is accepted by the regulators, the investors, bankers, creditors, debtors, and public at large. So while indulging into assurance function, we can say that a chartered accountant in practice may not be well versed with entire laws and regulations that are applicable to an entity. But the chartered accountant in public practice is required to know the material laws and regulations as per the register which is required to be maintained, and see that all the compliances of such laws and regulations which has the impact on financial statements of the entity has been adhered thereto, and in case of non-compliances, to examine the magnitude of such non-compliance and document it, and if required, report it. Now, for an example, most of us conducts bank audit. Under bank audit, RBI has one of the guidelines that if while you are doing audit, you come across a fraud of magnitude rupees 1 crore or above, you have to immediately report the same under Mitra Committee guidelines to Reserve Bank of India. And as an auditor of that bank, be it as a post of the central statutory auditor or a branch level auditor, you come across such fraud of volume exceeding rupees 1 crore and above, you have to immediately document such kind of fraud and report to RBI, bypassing the, if you are a branch auditor, branch level management, central auditor, you can mark a copy, but you have to report it directly to Reserve Bank of India because that requires. Similarly, if you are doing the audit of companies who are allotted by CAG, such kind of frauds you have to report to CAG because SA 250 with effect from 1st April 2009 governs each and every audit function, whereas section 360 of NOCLAR under Code of Ethics governs the non-compliances for only listed entities, and that too having net worth of rupees 250 crores and above. The question here to all chartered accountants in practice is that first you are governed by SA 250, which is compliance with other laws and regulations, and that covers the wider aspect. And then this additional requirement when you are auditing the listed entity and that entity has a net worth exceeding rupees 250 crores, as it was made by an announcement effective 1st October 2022. Now, what is audit engagement? Audit engagement means reasonable audit assurance in professional accountant in public practice to express an opinion on the financial statements, to give true and fair view in accordance with applicable financial reporting framework, that is applicable auditing and accounting standards. This already discussed. Whether NOCLAR requirement of Section 360 applies to audit of all listed entities? No, it applies to listed entities having net worth of rupees 250 crores and more. But SA 250 applies to all audits, be it listed entity, companies, trust, partnership firms, proprietorship concern, NGOs, anything. Wherever you are carrying out assurance function, SA 250 is applicable. When I call trust, now recently Section 12A of Income Tax Act dealing with the registration of trust also mandates that the trust which gets them registered under income tax law has to comply with other laws and regulations also. Yeah, and if they are not complying with such other laws and regulations, their registration might not be renewed by income tax authority in India. This already talked with while discussing Section 260. Here the question is whether NOCLAR requirement of Section 360 repealed and replaced standard of auditing 250. No, it is in addition to standard of auditing 250. And when you come across any fraud, then SA 240 relating to fraud is also applicable. And the confidentiality guidelines as per our code under paragraph required 114D also have to be taken overlooked by the CA in practice and have to report to the regulators if they are above the threshold limits. Object I have already discussed. The second para here is important, where the professional accountant has withdrawn. The question here is, one auditor of a company comes across substantial non-compliance with other laws and regulations, and he has resigned from such engagement, and the new CA firm or new auditor has been appointed by that entity following all the applicable rules and regulations of Companies Act. And when that auditor under Clause 8 of first schedule, Part 1, makes the communication for obtaining no objection in his carrying out the audit, the predecessor auditor, outgoing auditor, is required to make, because the word used is shall, is required to make that incoming auditor all the observations for which he has resigned from that entity's audit. That is here. Now, how to go forward when the non-compliance has been detected. First and foremost, the CA in practice need to understand the matter of such non-compliance. Now, a listed entity has, say, 10 manufacturing facilities. And in particular manufacturing facility, it was required that that manufacturing facility should obtain the trade license as well as, say, establishment license from the local authority, and also is required to obtain the pollution certificate. And it has come to the notice while conducting the audit that such documents or the renewal fees of such licenses has not been paid in the financials. Just non-payment of renewal fees is maybe of a very small amount. Say trade license or the pollution license renewal fees is, say, 20,000 rupees. And in the financials, you get that 20,000 rupees has not been paid. As an auditor, just making the provision for liability will not absolve you, because the non-renewal or non-payment of the renewal fees may be a kind of red flag. How the entity might have applied for pollution renewal and the environmental protection regulators are not giving the pollution certificate to that entity because that entity's effluent treatment plant are now substandard or cannot treat the effluents, or their boiler are emitting smoke and the smoke filters are not able to have the filtration of the smoke and they are outdated. And to make this good, it requires huge cost depending on the organization's production facility, and the organization is not willing to adhere to such cost, and due to that renewal is not there. So professional skepticism has to be kept in place by the auditor. Just mere non-renewal and non-payment of fees is not the matter. The gravity of matter is to be checked by the professional accountant in public practice, and he has to understand the matter why the renewal is not there. If it is due to entities non-compliance, then he has to talk with the top management. What are their timeline, how they will meet this, and by what time it will be renewed. Suppose it is renewed within the audit period, then he may not report it to the appropriate authority or regulators. But it comes to his knowledge that such kind of non-renewal cannot be made good in near future also, and even after its balance sheet date also. Then he has to take alternative route, ascertain the magnitude of non-compliance and what effect it will have on the public at large. Depending on such, he has to document it, he has to obtain the opinion of the technicians within the organization, what they have to say, and depending on such document, he has to form an opinion to report the same as other matters, as well as to report to appropriate authority, depending on the magnitude of such kind of non-compliances. And if required, he must disengage himself from such entities' audit or assurance function, and to report it to the registrar of companies also in his resignation form ADT 3, that due to such circumstances, I am unable to carry out the audit. This is the operational side. Coming into the financial side also, if there is a fraud, substantial fraud taken by the employees on the organization or by the organization on the employees, such has to be documented as well. In nutshell, this is the requirement of section 60 360 to public practice of professional accountants. This I talked how the nature and circumstances, what is the likelihood of pollution, potential consequences of the matter, level of management is able to investigate or not, how to check it. This is what the code says. And how to go with rectify, remediate, or mitigate, talk with the management about non-compliance, disclose to appropriate authority if it is not able to be mitigated. These points discussed: comply, identify the non-compliances, communication. Now group. Sometimes joint auditors, group auditors, and branch auditors are appointed in case of large entities. Now take a scenario that the chartered accountant in practice is auditor of a particular part of the entity or a particular geographical location of an entity, and he comes about the non-compliances of a magnitude which is required to be reported to the regulators or authorities. After making everything documented, because he is not the lead auditor or the group auditor, he should first communicate with the engagement partner of the group auditor, key engagement partner of the group auditor, and with all the documents which he has gathered while discharging his assurance function, he has to report it to the key engagement partner of the group audit. That key engagement partner should evaluate, call for information from the auditor if required, who is auditing that geographical location, tabulate the matter, discuss with the parent entity, top management, inquire what is their outcome or outlook on such other non-compliances, what is the timeline, how they will mitigate such non-compliance, whether they are able to mitigate or not. Depending on all such kind of circumstances, the group key engagement partner needs to draw his opinion, and then he should adhere either to report to the authorities or wait for the non-compliance to be made good and made it compliant. In nutshell, this is the part communication with respect of group audits. So determining whether further action is needed or not, depending on communication with the top management, whether their response was timely, whether non-compliance or suspected non-compliance has been investigated by them before giving any reply. Just 1 minute. Whether action has been taken or it will be taken, whether it is deliberate intent of such non-compliance or not, whether appropriate step has been taken or not. The accountant has evidence or suspects involvement or intended involvement to any non-compliances of the top management, then he has no alternative but to report to the regulators depending on the magnitude of non-compliance with such other laws and regulations. Seeking advice internally within the hierarchy or from the legal advice of the legal counsel or confidentiality under confidential with the institute. Paragraph required 114(1)(d) is for confidentiality. The same which I talked for public professional accountant in service applies to professional accountant in public practice, that is CA in practice, in case of the matters which come across of non-compliances, they have to check, identify, understand, observe, talk with top management, get their reply, and check whether that reply is proper or not, whether the entity can mitigate such non-compliances or not, and thereafter they need to address the matter suitably, either by reporting to regulators or reporting in their financial statements, as the case may be. Clause E, the determination of whether to make such disclosures will depend on how the magnitude is there, whether to SEBI if there is insider trading, pollution, then to the authorities of NCR if it is based in Delhi, or capital also, Green Tribunal also, depending on the nature. This portion of NOCLAR sections 360, due to announcement made in September 2022, with effect from 1st October 2022, for the time being has been made as repealed by the council. Maybe in future it may not be the part of code. How the documentation is to be done for such non-compliances? First, how the non-compliance occurred, who found it, what was the label where it was occurring, that has to be documented. Understanding the non-compliance, what is its impact on the entity, public at large, and the financials, then how it has been communicated with the top management, TCWG, then their timely response, whether their response is appropriate and is helping to mitigate such non-compliance or not. If not, then taking legal opinion, seeking advice, discussion, then if required, then it has to be reported by taking a reasonable informed third-party test, as if you are not related to that engagement, and in case unrelated party, how they will react to such kind of situations. This is listed here. Now, the last part of my deliberation, audit documentation. Essay 230. Audit documentation. I would like to start it as you cannot speak. You cannot speak what you have audited. Okay? Your document should speak what you have audited. So the audit documentation is very important. This standard, as an auditor, we all know that SQC1 states that the closing files should be prepared within 60 days of completion of audit, and the retention of document in para 83 of SAQ1 says that it has to be retained for 7 years. And that audit document file should be such that the experienced auditor who is not related with such assurance function can understand what audit is done by that working audit file and audit documentation. This has been there. Form, content, and extent of audit documentation. A smaller entity, the audited documentation is lesser. For larger entities, more exhaustive. Each and every process has to be documented. All the standards of auditing has to be adhered thereto. Can anyone say how many standards of auditings are there? There are different types of standards of auditing relating to introductory matters, general principles, risk assessment, audit evidence, using work of others, audit conclusions, specialized areas. Existence of adequately documented audit plan demonstrate that the audit has been complied with, like who were in the audit team, who was the key audit partner, key engagement audit partner, who were in his team, how the audit was planned, what were the mandates, what were the areas need to be checked, everything should be under the audit plan, and accordingly the audit documentation is required to be done. This is the essays. And the closing file one prepares should not be altered or modified after 60 days. Because as we all know, when NAFRA calls for any investigation, first and foremost is the closing audit document that is called as audit file. And if it is kept electronically and the time snap of the electronic document comes that it is after 60 days of the date of signing of financials, it may concluded by the NAFRA also that there has been tampering or alteration of such audit closing files. So we should check that proper closing file and audit file is made, and that too within 60 days of completion of the assignment, and it has to be retained for 7 years as per SQC 1. These are all on the audit documentation. This is in simple the suggested checklist how the audit document file is to be made. What are the documents to be kept? Appointment letter, engagement letter, if that is a company MOA, memorandum and articles of association, whether ADT1 related to your appointment has been filed with ROC, obtained a copy of it under clause 8, part 1, schedule, first schedule, whether you have communicated with the auditor, previous auditor, and reasonable time has been given. If he has communicated back to you, what was the communication, any objection, you have to address to that. If no objection, any material which is given on record, which you have to check, then you have to make that a part of your audit plan. Then acknowledge the business of client, know the business of client, how the business of client is run. Nowadays, it is accrual basis, how stock is valued, how sales are made, how GST returns are filed, whether they are filed in time or not, what is the turnover as per GST return, as per books of accounts, whether they match or not. In this manner, the audit file and audit plan and audit documentation relating to all laws and regulations applicable to entity is to be planned with. With this, I thank you all for patience listening, and this was in nutshell a deliberation given. Thank you all for patience listening. Now I am open for Q&A.
Thank you so much, sir, for the wonderful session. Sir, we have received a few queries for the session. May I ask with you, sir?
Yes.
Sir, one query is, are the provisions of NOCLAR applicable in case of tax audit under Income Tax Act or any other law?
As you are performing the assurance function, tax audit is also an assurance function, and you are an auditor, so SA 250 in place first. Then if it is a tax audit of a listed entity, then section 360 is also in place. And while conducting tax audit, suppose clause 22, which talks about MSME, and the entity is not paying the MSME within the required timeline, then it is also a non-compliance expressly required, and it has to be reported. Then payment of bonus act, PF, ESI. So these provisions are applicable there too. with limited intent of other laws which are directed by tax audit, say PF, ESI also. Thank you.
Next question is, hence it is appropriate to be a whistleblower in case of serious non-compliance.
Come again.
Hence, it is appropriate to be a whistleblower in case of serious non-compliance.
Yes, it is appropriate to be a whistleblower because the code also requires it to report it to the appropriate authority when the organization is not able to mitigate such non-compliances. But before reporting, you should document each and every evidence why such non-compliance cannot be mitigated by the organization. That is, you have to report to the immediate top management first that such non-compliance has come to your notice and what is your action on it. Receiving their reply, if it is not appropriate, you are required to report it. And if its magnitude is of grievance nature, that organization or a regulator requires, like RBI in case of fraud of 1 crore and above, or Anti-Money Laundering Act requires you to report directly, then you can go bypass the organization hierarchy and be a whistleblower and you can report it directly.
Thank you, sir. Last question is, can we make a disclosure without reporting to the management?
It depends on the magnitude of non-compliance, as I have deliberated. If that non-compliance is of that nature, which management can make good, and management is not involved in such non-compliance, it has come to their knowledge by or through you, and you have to give that the management makes good of it. But in some kind of non-compliance, management is also a party to it, then you have to directly disclose it. Then confidentiality requirement is also not required.
Thank you so much, sir. No more questions.
Yeah.
Thank you so much, sir, for the wonderful session.
Yeah, thank you.
Thank you, sir.
Yeah. Shall I leave now?
Yes, sir.
Yeah.
Thank you. Yes, sir.